All right, guys, remember when I was telling you, right? Remember when I was telling you that you got to be careful because we're still in this environment where down is up. Right? You guys remember that? I have been talking to you this way, right? Down is up, down is up, down is up. All right. And I told you that it wouldn't stay this way, but I wanted to give you signs of when to know when it's over or when it's starting to be over. And so I want to spend time talking about that today. What are the signs that we're back to a normal market that respects violence to the downside? What are the signs that show us that we're back to a market where walls, big giant walls, are not easily violated? What are the signs that we're back to a market where stocks just don't blast through their 200 period moving averages with a high degree of regularity, like they mean absolutely nothing? And so it's important to know these signs. Now, one of the things I explained to you was that one of the signs is going to be yourselves. So if you were having trouble during the last several months being almost exclusively long, if you were still trying to find shorts, if you were still doing more shorts than buying, you probably had a rough time. And I told you that one of the signs is going to be when you start getting used to this, when you start understanding, when you start really changing and doing almost all buys, that's when it's going to change. Anybody remember me telling you that? I'm curious. That's right, Richard. All right. So that's always one of the signs. You gotta use yourself, right? If you were struggling with that, you gotta use yourself. Now, let's cover some real times. Let's cover some real signs, right? Sign number one, 200s are back to being respected. But I mean, not just with one stock, all over, right? So you see it prevalently. Like we can take a look at Apple, respects the 200. You can take a look at Facebook, remember the 200's an area, respects that 200. All right. Can look at BABA, remember the 200's an area. It's not a line, it's an area, it's a zone. Respects that 200. Okay. You know, nothing is ever 100%, but we're talking the majority of times. We can take a look at Square. Respects that 200 zone. All right. So you get the point. AMD, it's all over. It's all over the place. So that's one sign, right? Another sign, which I think is important as well, another sign is solid declines start to adhere to the normal, what should I say, the normal percentages. So So sign number 2, see the solid drop? Look at the bounce. All right. It's 1/3 to 1/2, right? 1/3 to 1/2 bounce, boom, resume. So look, drop, 1/3 to 1 bounce, 1/3 to 1/2, boom, 1/3 to 1/2, boom, 1/3 to 1/2, boom. So you get, it's never perfect, but you start to get the respect of those percentages again. You see? The respect of those percentages again. Nothing really, it's hard for the stock to get past, though you'll always have exceptions, but you'll see this just across the board. Look at the bounces. There, you see? Now, things look like they're going to try to squeeze about halfway back up here. That's what things look like right now, but you get the point. So sign number 1, 200s become a lot more reliable. Sign number 2, strong moves down, keep their rallies back to the upside in check. Okay? In check. 1/3 to 1/2 most of the time. Most of the time. All right? Nothing's ever 100%. Okay? Decline, rally, stays in check. Decline, rally, stays in check. Okay? Now, of course, when you start to get spaces, you can potentially get a little rest. You all know those concepts. Look at this. Sign number 2. I want to show you. Sign number 3. So sign number 1 is 200s. Sign number 2, percentage bounces after strong moves down. On, by and large, stay in check. Sign number 3, frequent GBIing. So remember when we had the crazy bull period, it was like RBIs were just all over the place. You get power, pause, power again, power, pause, power up again. So we got a lot of this. Power, power, pause, power, power, pause, pause, power. So we got a lot of this going on when it was crazy. All right. Well, you get a lot of that now in reverse on the down days. So, you know, you get power, power, pause, power, pause, power. See, they're brief little pauses. Power, pause, power. So you see a lot of the power pause across a lot of things. So here's PayPal, here's Square, you know? And look at your pauses, but doesn't abrupt the power. You see? So that's sign number 3. Sign number 1, once again, you have the obeyance of the 200 period moving average more. Sign number 2, power to the downside. keeps the rallies back in check. You understand? Sign number 3. Whoa. Sign number 3, power pause to the downside with greater frequency. And sign number 4, gaps are respected with more regularity. Let me see if I can show you that here today. Again, not across the board. All right, so you know what you're supposed to do with your gaps is you're supposed to fill them in, right? To the open. So here's the open. So you get this, boom, the gap is respected. It's not completely just taken out. We had some takeouts this morning, of course, but on average, you start to see more of your gaps get to the open, respected. So the bounce into the gap, and then the resuming of the gap. Beautiful.